Take it across to Kunal, Nooresh. We've got Andrew Holland as well joining in on the show. Kunal, thanks to RIL and HDFC Bank, the Nifty is not. Do you see any rebound in HDFC Bank anytime soon?
Not really. I don't expect an immediate rebound. In fact, history has been, historical reference points has been indicated that whenever we've seen such a kind of a sharp breakdown on stock prices, whether it's on HDFC Bank or on a few large cap names, it's actually gone into a further sell-off or a corrective mode thereafter. We've seen that happening for many of the mid-cap names in the last maybe couple of weeks as well. So, which means that this could be a pattern which could get repeated for the most of the large-cap names. I don't expect HDFC to get into any immediate recovery. In fact, I think 1530 is the first level of strong support for the stock price, which means that there could be another drop of maybe 30 to 40 points before it tries to come back closer to its short-term support level.
Okay, so that's a take coming in on HDFC Bank, but let's just extend that argument to PSU banks as well. Nooresh, what's your view? Is it the start of a reversal or just a one-day move?
I would say in the smaller names, it could be start of a major reversal wherein a short-term top could be in place and we could see a 10 to 15% decline in a lot of these names. But in the larger names, not really much. State Bank of India looks interesting. The stock has not even crossed the highs, unlike what has happened with the rest of the names. So over the last, say 1 year, it has made multiple attempts around 600, 620. And 550 has become a base. In the short term now, 580, 600 becomes a base. So if one is looking at a PSU bank sector, SBI seems to be the best bet. Canara Bank, Bank of Baroda, some bit of a dip given the rally. Same with PNB, which has gone up from 65 to almost closer to 80. So a 5%, 3 to 5% dip would be normal, and then one can look at it. But as of now, SBI looks interesting. But a strict avoid on the smaller names which have very, very low float.
Okay, let's get back to the market action then. Still under pressure, about 200 odd points or so. We just spoke about HDFC Bank. Nooresh, since you've been tracking Reliance for a while and betting on a recovery actually on RIL, just want to revisit the charts there.
So Reliance and HDFC have both been sideways, just testing the previous highs and then coming back again. So Reliance Industries today broke the recent swing lows of 2400. Now it goes back to the same zone, 2300, 2350, which has been the last breakout point. So till the time it holds about 2350, there can be a slow and steady recovery, but the momentum is not great. But closer to 2350 is where one could take a buy with a small stop loss below 2320. HDFC Bank, on the other hand, has gone totally sideways. If you look at it, the stock is available at the same prices where it was in February 2021. So that's quite a long period of time where the stock has gone nowhere. And if you look at it, even in the near term in March, it made a low of 1530 levels. The stock was available at 1500 multiple times at this band only. So 1500 is a base. 1700, 1750 got tested 6-8 times over the last 2 years. Before the merger as well as on the date of the merger and over the last 4 months also. So it seems like it has gone into a long sideways period. And the problem about HDFC Bank is not the fact that the stock goes sideways. It is 14% of the Nifty 50. It's 28% of the Bank Nifty, which makes it trendless and becomes a problem in terms of momentum for the indices. So till the time we are at 1500 to 1700, this could remain an overhang for the indices to get momentum.
What's your sense on HDFC Bank? You think the market is fair in, punishing the stock? Yes, at the analyst day, they did talk about the NIMS guidance and they do expect a fall about 25 to 30 basis points. But that's largely on account of, the investments in Yes and Bandhan. Andrew?
So I think I think the market. Let me just talk about the market first, very quickly. It's been kind of getting into that overbought territory. So we always have some catalyst which brings it down, and maybe that's HDFC today. Obviously, I think the questions now go back to all the banks. Is there going to be a NIM compression? I don't think anyone has this answer. Everyone's saying no, it should be okay this quarter. And maybe it is, but I think going ahead, the street's now kind of scratching its head and saying, well, if this is what's happening with HDFC Bank, is this a problem for others as well? So I think that's, the broad brush kind of thinking on the banking sector. So we've had some, it's been a nice rally in quite a lot of these banks recently, particularly the PSU banks. Maybe that's over in the short term as we all now kind of think about the results going forward and the commentary from banks. Is it going to be as positive as people were hoping for?
The take coming in on HDFC Bank, but just shifting focus away from the banking space and talking about aviation, because there seems to be another crisis brewing in the airspace, and this one is specific to what's happening with Akasa Air, because there was a massive exodus of pilots that had happened. But what is the impact on the rest of the industry as well? Let's try and decode that with Mayur Milak, the Senior Vice President, Auto and Aviation at Asian Market Securities. Mayur, hi, thanks so much for making time and speaking with us. Well, first up, explain to us what happened at Akasa Air, why did it happen, and what's the possible options available for Akasa Air to go forward from here on?
Yeah, so I think from what we hear from reports and stuff from the CEO's message, clearly seems that there is a pilot issue. And this is definitely a big issue, at a time when you are at a fleet of, 20 plus and you're looking to expand. And then if you do not have the necessary crew in place, it obviously creates a lot of havoc, and which I think they've clearly mentioned into their petition that they have cancelled about 600 flights in August. They are looking at another 600 cancellations in September. Doesn't ooze confidence in customers. The customer will have prime doubts into you are entering a prime season, and if you are on Akasa and that gets cancelled, then of course you have no choice. They do not reimburse you any which ways. So yes, this is a big issue for the airline.
This is also going to, in that sense, then weigh an unnecessary burden on the already completely burdened aviation space with practically just Interglobe Aviation out there. I mean, of course, you have Vistara, etc. as well.
Yeah, I think, so you are at a point where crude is rising. So naturally, the cost is expected to go up. Another supply, chain disruption through Akasa, where they've clearly mentioned that they are ready to sacrifice market share game, but to make sure that, whatever is existing, they do it pretty well. So clearly gives pricing power to the industry. So yes, from an Indigo's competitor's point of view, it is good. But yes, I think this is not great for the industry overall. I think it needs to be rationalized pretty well going forward.
Just thinking, Mayur, would it mean that apart from crude, there could be another pressure on the P&L of all of these companies, given the fact there could be a headcount cost which will increase as well? We have seen it, of course, with other sectors as well when there is this demand-supply mismatch. Do you expect a sort of all of these lateral moves to put a pressure on the P&L further? And for Indigo, what kind of upside could it mean, at least on the top line?
So two things here. So you understand that you are entering a peak season, all your festive season is now in October, November, December. Prices are already up by almost 30-40% during this time. So from a lean period of Q2, you are entering super peak season for the aviation industry. From what we understand, the guys have already taken a 30-40% jump into their staff cost. So yes, clearly, apart from fuel, you are going to see a stretch on your cost. But you are also entering a season where you get to, make an amazing RASK. So that kind of compensates this increase through additional air travel. For Indigo particularly, I think this is good news because, every time a peer is in trouble, they are possibly the only ones who are in a position to take advantage because of their steady increase in capacities and, the kind of benched crew that they have. So clearly they will be the key beneficiary of this.
On that note, we'll let you go. Appreciate making a quick stop and helping us understand what's the latest there. But going back to a conversation with Andrew as well. And Andrew, I wanted to kind of pan out and talk about the market as a whole, because of late we have got a bit of differentiated views in the sense. Today, of course, there was this Jefferies note talking about how one should probably become a lot more cautious and move into cash. They're actually talking about being a lot more negative on the stock market for the very immediate term as far as Indian returns are concerned. And on the other hand, they're talking, there are others like Motilal Oswal talking about how the earnings actually has improved quite a bit, and hence the valuation is not best compared with the last 5-10 year average. Which side of the end are you? Are the markets looking expensive, or it's fair with respect to the earnings growth that we're witnessing?
Valuations, I have no real argument on the bull side of the argument. In that, anyway, with the multiplier effect of all the government and private capex that's going on and will continue to go on for the remainder of the year, that should be a good prop, or if not a kind of kicker towards earnings being upgraded. So I'm on the valuation is not so it's not so worrying. What I think in the very short term though, given the market rise and the fact that we're kind of moving towards that overbought territory, it doesn't take a lot to kind of move us away from that scenario, which we saw in mid caps and small caps a week or so ago. So if you take the negatives out there, which is obviously, well, the Fed tonight we'll see, but that should be a hawkish pause. But with where the oil price is at the moment, the fact that the monsoons are below average, El Nino's still out there, and so forth, that there's quite a number of headwinds, both a little locally, but it's more messy globally in terms of the expectations, and really if it's that Goldilocks scenario where it's longer in terms of holding on interest rates for higher going forward. So that's where the market is. It's slightly kind of confusing, but I think in the short term, the markets will probably due for a mild correction, and sometimes these catalysts come out of nowhere to help that happen. So not overly worried, but certainly wouldn't be kind of thinking of going to cash at this point. That's for sure.
The pressure, as we speak, still haven't seen any meaningful recovery kick in, still down 200 points. We'll take a very quick break on that note. When we come back, lots more on the markets on the other side.